This is Jay Martin.
Welcome back to the Jay Martin Show, and I'm joined once again by Lobo Tiggre. Lobo, it's good to see you again.
Good to see you too, Jay.
I think I had you on the show last about 18 months ago, maybe even longer, 24 months ago. We were talking precious metals. And today I want to jump into the uranium space with you because I'm sure you've seen this before, but over the last 8 years, if I think about whenever we had uranium focused content in one of our speaker halls at our conference, the audience always showed up and they were super loyal to the industry. And there always seemed to be a uranium bull market just around the corner, right? Just there. And now mainstream consensus is kind of catching on that there's more tailwinds today than ever before. And the future bull market of uranium isn't maybe 5 years out, but realistically, it's around the corner for real. Would you agree with that, Lobo? And if so, what's different today from 5, 6 years ago?
Well, to answer the last part first, it clearly is an idea whose time has come. And it's not just the past few years, but really there was a nuclear renaissance almost 20 years ago, starting up when I first started in this business, as a little babe in diapers sitting on Doug Casey's knee as he taught me the ropes in the industry here. I remember that was when that guy, I forget his name, from Greenpeace came out and said that,
maybe
we need to reconsider nuclear.
Is that Rex Weiler?
No.
Okay.
Patrick Michaels. I don't remember the name, but
right.
It was a while ago. But yeah. I remember it was really notable because it was a guy from Greenpeace, one of the founders, saying we need to rethink nuclear. And that kind of heated up for a while. And then Fukushima happened and everything went back into, if you'll forgive the obvious pun, nuclear winter mode again.
Yeah.
So it took a lot for that to turn around. But it really is happening. The war clearly has delivered a major wake-up call. The irony is that all of the fundamentals haven't really changed that much. The war has just sort of slapped people around and made them, it's accelerated things. It's brought the self-imposed crisis of the energy transition and compacted it into a few months, what would have happened over years ahead. And that wake-up call has really got people reconsidering. That has made this an idea whose time has come once again. I got to say, just let me jump in here, Jay, and say, I have a reputation amongst silver bugs. They call me Darth Silver because I'm a silver bull, but I'm not one of these rah, silver forever. Silver's more precious than gold, right? I'm not religious about it. I'm not in love with it. I'm an analyst who sees market trends that make me bullish on silver now. And the relevance to uranium is, a lot of people remember uranium going from $7 to $140 a pound, and some of these stocks just not going through the roof, but to the moon, as we say. The Paladin was the great example of 17,000% gains, not 10 baggers, not 50 bagger. This was 170 bagger. Back in the last thing, and people are so excited. You talked about the loyalty of the uranium bug out there. They're looking for that again. So I have to say, as an analyst, it's not my job to tell you what you want to hear. It's my job to give you my best judgment, the ideas, my thinking, maybe what you need to hear. So wearing the Darth uranium mantle now, I got to say, I'm very bullish. I think it's an idea whose time has come, but please don't take this to mean rah, it's got to go to new all-time highs and the stocks are all going to the moon. It is not a safe bet that this rising tide will lift all ships. Due diligence still matters. I've said a bunch there, Jay. There's different directions we can go with that, but now that I've officially rained on the parade, maybe you've got a question or two to ask me.
No, that's a great start. And first of all, I really appreciate the non-dogmatic approach to any asset class. And investors get in so much trouble when they fall in love with their asset, right? Because it's not going to love you back no matter what, right? And being agnostic towards silver, appreciating it for the right reasons is really smart. And every investor should pay attention to that because I have an allergic reaction to hardcore gold bugs, hardcore silver bugs, hardcore Bitcoin maximalists. It's all the same to me. It's like you turn on the blinders and you're the one that gets hurt in that scenario. So I do appreciate your critical thought process. You've, I believe, said something to the effect of, uranium is the one sector that can literally blow up on investors. And you mentioned the Fukushima disaster Now this, I may be overthinking this, but looking at the proximity of shelling to the nuclear plants I'm going to botch the name, Zaporizhzhia? The one I'm talking about.
I do speak Russian, not Ukrainian. I do speak Russian, but not enough that I would even attempt that. Let's just say in Ukraine, that plant in Ukraine, it clearly has affected share prices of companies. It's affected even the spot price on the scary news, on the day of some alarming news. So that is relevant. It is important. Never say never. Who knows, Jay? We can't predict the day-to-day volatility of war, of all things. But I do think that both sides there are the truth is the first casualty of war. I don't believe either side is innocent in this whole story, but I do believe that both sides are well aware that a major nuclear incident there would be bad for both. You could say, oh, it's in Ukraine, so that's worse for the Ukraine. No, it's so close to Russia, it would be very bad for both. If you remember the scariest nuclear incident of all time is Chernobyl. I mean, 3 Mile Island and Fukushima are nothing compared to Chernobyl. That was the real deal. That was in Ukraine as well. But the wind blew in the direction of Belarus. So there's whole swaths of Belarus that were profoundly affected by this. And so, a fallout cloud doesn't care where the international border is. Both sides know this. I have to say, it is alarming to me that there is as much fighting so close to the plant and even hitting the admin buildings and the other stuff as there has been. Can't ignore that. That's a tail risk. Sorry, a headwind risk. But I do think that both sides really don't want that to happen. I think both sides are willing to play politics with this. I think it's a very dangerous game, fighting so near there. But the Cold War relied on mutual assured destruction. It seemed mad at the time, but it worked in the end. For all the posturing and all the politics on both sides, nobody really wanted to start World War III. And the situation around that plant in Ukraine, I think, is like that. It's mutually assured death, at the very least, on a large scale for a lot of people on both sides. So I'm hoping that if not reason, then at least self-interest will prevail there. But it is a point worth making. But my Darth uranium thesis isn't just that this is a sector that could blow up on us. That is always worth saying, because it can happen. You never know. It's unpredictable. So it's not something to bet the farm on. That said, the accidents are really quite rare. And really, 3 Mile Island was a nothing burger. It was more scare than anything else.
Yeah.
And Fukushima was a tsunami. If the backup generators had been slightly different placed, we wouldn't even be talking about it. It was a natural disaster more than anything else. And the harm from the actual nuclear incident is minimal. It's a Chernobyl that we need to worry about, and we've all learned from that. So I actually don't worry about this a lot. It's my Darth thesis is not that, oh, there's another nuclear accident around the corner. I just think that's a risk nobody should ignore.
Quick break, then we'll get back to the interview. In the description of this video is a link where you can subscribe to my weekly newsletter. It's free and I love writing it. This week, for example, what I wrote about was a traditional role in society that we've lost, known as the sacred clown. In historic Lakota culture, for example, and many others, there is a role known as the Hayoka, and the Hayoka's purpose was to make fun of everybody and everything all the time, to prevent egos from running away or people taking themselves or their ideas too seriously. We've lost that role in society today because those people get canceled, and that's a problem. So I write about things like this. I'd love to have you join the team. It's super fun. Link in the description. Now back to the interview. Enjoy. Yeah, no, and I agree with you 100%. I thought I'd ask just because I've heard you say that, and I'm sure it's said in jest, because it is what it is. So, however, you started this interview by saying you are very bullish right now, and I would say the bullish sentiment on Twitter and throughout the industry is hotter than I've seen it before. Is it still the early innings, Lobo? Is uranium still a contrarian bet, or what are your thoughts on the market timing of this cycle right now?
Yes. Well, I've got good news and bad news there. Yes, I do think it's early stages. I mean, we clearly are not yet at the incentive price required for mine supply to meet the growing demand. And the growing demand is, that is baked in the cake. You've got China building scores of these things, BRICS countries building these things. and even Germany, extending the life. I mean, they were like saying they wouldn't even think about it just a few months ago. And then it's like, well, we'll think about it, but not really. And now, I mean, it's just, of all places, Germany has decided to extend, and that gives them, of course, room to do a bigger about face. So this is like, we talk about hell freezing over before Germany would change its mind. Well, maybe Germany realized it would be hell freezing over if they didn't change their mind. And so that is a major reversal. It's forward looking, extremely bright for demand. And of course, there's California too. This isn't just a theory. This has happened. Like the Democratic governor, all ESG up and down every which way, he pushed this, and the legislator just voted it in. So that is a huge turnaround in California. So you've got two bellwether leading jurisdictions that many people follow or see as an example. So if only on a symbolic level, it's only one plant in California, it's only two in Germany. But at least symbolically, this is really important. The intellectual leadership here has changed between the war, the new Iron Curtain, and the climate crisis or perceived climate crisis, however you like that, whether it's perceived or real, the politicians are acting on this. You have these factors coming to a head right now, this winter. It's extremely bullish for uranium. But it's not just the thorium here that has me excited. That's what I'm saying, is that cements the demand that we're already seeing, like the plants that are under construction and the plants that are approved and moving forward. We're already looking at increasing demand in an industry that for years has seen a supply deficit. That didn't matter before because you had excess supply, secondary supply from places like Japan, which shut down all its nuclear reactors. So the fact that the mines are not producing as much as the demand for years hasn't mattered. Now it does. Now you've got Japan restarting, and you've got Germany and California doing about face, and you've got BRICS countries, building Gonzo as fast as they safely can, hopefully safely. So this, like we've just been saying, this has come to a head right now. And it's interesting that, we're seeing it in, I think, the resiliency of the spot price. It might have gotten ahead of itself. It surged up on the war news. Last year, it surged up on Sprott, hoovering up all the cheap pounds.
Yeah.
They're all distractions. I mean, it's nice, and it's important to know that those cheap pounds are no longer, threatening the market thanks to Sprott. But the real fundamental supply and demand are the basis of my bull case here. And it's nice to see it coming to a head now. It's nice to see uranium holding up even when there's fear of recession, which is normally bad for the quote energy sector and so on. I think the metal itself is performing really well. The stocks have been, just tossed around by the volatility of the market despite that. But recently, we've started to see some decoupling of the uranium stocks from the broader markets. We've seen days, just as you and I recorded this, Jay, in the last week, we've seen days when the broader markets have been in the red and the uranium stocks have been in the green. That has been, unfortunately, not the case for much of the last year, when we've seen, many times from uranium surging and the darn stocks are going down because the market is. Yes. So if the thorium is now catching up with the actual realities for uranium, that would explain this decoupling, and it makes it all the more bullish in the near term. So that's the good news, Jay. I am extremely positive. I have called uranium my highest confidence trade for this year, even beating out gold and silver for the remainder of this year.
Interesting. Okay, I got to pull on that thread, Lobo. What can you share about, your qualifying criteria for allocating capital? Where are you looking? Where are you putting cash?
Well, so the good news is the bad news of this decoupling we've been talking about. Now, if it comes undone, we've just talked and said that it's not too late. And I'm not one of these harem scarum, gotta buy now, subscribe now, or you'll miss this wonderful opportunity. But I must say that as we speak, if this decoupling is happening, the opportunity in the stocks could actually be sort of a limited time one. Not promising that. I'm just saying that, we've seen the stocks get beat up and go on sale despite the fundamentals. If that stops, we may not get a chance at low prices again. And so we've seen, actually, not just since last year and Sprott hoovering up the cheap pounds, but uranium's actually been on an upward trend for 5 years. And it's been a very, very steep, 2 steps forward, 1 step back, huge step backs, right? 2 steps forward, huge step back, very sharp sawtooth pattern, but it has been going up for 5 years. And my guidance this whole time has been, don't chase it when they're going hot, wait for the step back. There's always a step back, and that's the time to buy. Now we are in a step back right now. That's the good news. The bad news is that if I'm right about the decoupling ahead, we may not see quite as many step backs as we have seen in the past. We may see uranium rising and not dropping as dramatically, because the writing is on the wall. Everybody can see it. This is something in short supply, can't be supplied adequately at current prices. Prices have to go up. And eventually, of course, high prices will cure high prices, and I want to go there. But for right now, this is unlike me. And it may, anybody who's watching this who's never heard me before, you may say, yeah, you're always just trying to sell your stuff. Look on YouTube, find me in the past. It is very rare for me to say something like, now is the time to act. But I do believe there's a case to be made for that in uranium because of this potential decoupling and, again, the fundamental realities of the uranium market, plus the thorium heating up courtesy of Putin's war on Ukraine.
Okay. And then, I'll back that. Louis, I've had you on the show and you've been at the conferences for years, and I wouldn't say you're the type to pound the podium and say buy now. When you're looking at your uranium portfolio, and the companies available right now, so do you look at companies like Cameco? Are you looking earlier stage?
Yes, you did ask that before, Jay. Sorry, it slipped my mind.
No, that's okay. Yeah.
Okay, so what would I buy in this context? It's great to talk about the theory. Okay, it's the 1 step back, but so this is the even better news, is that when you have this big step back and everything goes on sale, and right now there's still, even though uranium has been blipping up over the last week or so, the stocks are still very much, most of them, on sale because the broader markets are such concern. And there's this worry about recession, right, which is supposed to be bad for the energy sector. But the good news here is that because we're not at the bottom of a 1 step back, but we're still in one of these 1 step back things, that means the best of the best plays out there are on sale, or at least relatively on sale. Now, if you do know me, then you know that I'm not one to hand out free stock picks. It's not fair to the people who pay me for that. I also think it's wise for anybody out there to question free stock picks. What's in it for them? Are they long already? Or, why are they telling me this? I think it's wise to ask that. So I'm not going to give you specific stock picks, Jay, but I will say, the obvious candidates are pretty few. And if you can buy like the best producers while they're on sale, that's a no-brainer. That's the go-to space for this. When everybody wakes up to what Germany and California are saying, the go-to, the well-known names in this space are obvious candidates. I also think that with the new resource nationalism that's surging as a response to the world discovering that the globalized economy is not anti-fragile, or is fragile. So people trying to bring supply chains home. There's a big move in the United States to source uranium in the United States. The US has, under Trump, and significantly not canceled under Biden, moved to build a uranium national stockpile like the petroleum reserve. Yeah. They're building a uranium reserve. There's also a multi-billion-dollar proposal sent to Congress to encourage domestic uranium production and enrichment. There is no uranium enrichment right now. We're talking about banning enriched uranium or any, uranium or nuclear industry materials from Russia. But the US actually has no capacity whatsoever right now to do this. There are US companies in the business, but they don't do it here. Now that could be fixed with time and money, but it's going to take time. But what I'm saying is there's an increased awareness, especially in the United States, about how dependent we are on foreign uranium. And so there are obvious beneficiaries there for US miners or US companies that could enrich in the United States again. So I'm close to giving a stock pick away there, Jay, closer than I normally do, because there are not a lot of these companies. The candidates are obvious. And if you can get something like this on sale, I mean, there's some of these that are on sale for 50% of what they were at the last, 2 steps forward.
Sure.
I think that's a great bargain.
And do you have specific rules, Lobo, in terms of percentage of capital allocated to maybe something like the spot, like a really sort of safe or, safe play, then maybe producer, and then what you allocate percentage wise towards the more speculative explorers?
Yeah, I hear you. I have 2 answers to that. Both are basically no.
Okay.
One is that it depends very much on type of investor or speculator that you are, what your criteria are. If you're older on fixed income, but you believe in the uranium story, you want some exposure to it, then going with one of the funds that is a uranium proxy makes a lot more sense. But if you're trying to generate wealth, if you want leverage to rising uranium prices, you clearly want one of the companies, because you have a company that goes from losing money on uranium to making money on uranium. And that change of valuation is huge, and it's natural and sensible for that stock to pull a hockey stick on you. So, it depends on what your goals are, what type of investor, your risk assessment, all the way down to the junior explorer is the riskiest of the riskiest. They also offer the greatest potential upside.
Yeah.
Though, connecting that back to the previous question, I would also say that if the premier plays in the space are on sale and they can present you with extraordinary capital gains with much less risk than, say, an explorer, especially an early stage explorer, then you got to balance risk and reward. So even though I'm still in the wealth generation phase of my career, right now I'm more inclined to stay away from early stage exploration and go with the advanced people that have pounds in the ground already defined. There's very little exploration risk. In some cases, there's little technical risk. It's just a matter of building the mine or bringing it back online in some cases. And if that happens and we're right about where uranium is going, those stocks should perform on the order of a discovery. And that's the potential I see in those. So if I can have that potential with much less risk, why bother with the riskier ones?
But yeah, no doubt. Okay, now as the market, if we're correct about this and the market begins to heat up and we see the returns from the more stable, secure developers and producers, eventually the explorers start to deliver returns as well. What are you going to look for, Lobo, to determine that we're aging in this market a little bit? We're getting towards the end of the cycle. Fools are rushing in. Maybe it's time to hit the bed and get out of here. Like what's
okay. Here comes my Darth Uranium mantle. First and foremost, I think it is a huge mistake to assume that this market will be just like the last one, and the spike up to $140 a pound and the stocks just going nuts, 100 baggers. It's a very different market space. And, oddly enough, we did have Cameco shut down this time with the COVID shutdowns, and it shut down last time with flooding at Cigar Lake was, the immediate cause for that spike back then. But basically, Kazatomprom didn't exist back then, and it is both a larger and lower cost producer than Cameco.
Yeah.
I'm not commenting positively or negatively on either company. That's not a recommendation. I'm just talking about the market space. And these are big enough 800-pound gorillas in the space that what happened to them is highly relevant. So, just the existence of Kazatomprom, I think, is an argument against expecting quite the vertical moonshot that we saw last time, both in the spot price and for the stocks.
Yeah.
I also think that we have, even though the market sort of went into its nuclear winter post Fukushima, the exploration didn't stop. The better projects of merit, the better companies that were able to persuade their shareholders that this will come back. The world needs nuclear energy. Don't give up. They were able to advance their projects. So there are a lot more advanced projects on now. So our friend Rick Rule's adage about high prices curing high prices. And by the way, hats off to Rick. I've started to see that show up on mainstream media like CNBC and all these other outlets. I'm hearing the pundits out there starting to say that. And I heard Rick say it 20 years ago. So I got to give him credit for that. Anyway, part of the Darth thesis here is absolutely that high prices will cure high prices, and they can do it sustainably. I think there's a very real chance that we won't see quite as high a spike as we did last time, because instead of suddenly having huge mine shutdowns, we've got the biggest mines coming online, and we've got the juniors with the highest margin mines. They're already spooling up. High prices have already started, haven't cured them yet, but they've started to cure high prices. You look at the mothballed production, several of those companies are talking about ramping back up, not just selling out of inventory or stocks, but starting to mine again. And then there's, of course, some of the higher margin developers that have been waiting for higher prices to build their mines, and they're building them already. That's already starting, Jay, or dear audience. This is already happening. Now, we've been in a mine supply deficit for a long time. And fortunately, even the Kazatomprom guys, they don't want to flood the market any more than OPEC wants to flood the world with oil. Yeah. So they've talked about, they're going to start normalizing, but instead of going back to their previous levels of production, they're talking about restoring previous production of about 50% by 2024. So there is some restraint here. I'm not saying that uranium's about to crash. It's all going away tomorrow. That's not what I'm saying. I'm saying that we don't have quite the acute situation that we had in 2006, 2007. And I'm saying that higher prices are already starting to incent the lower cost producers and pre-producers to come in. Mm-hmm. So what I think is we see a rising wave that may not spike as much. It may just crest. But here's the good news. Like, that would be bad news for everybody that's waiting for, new all-time highs in uranium, $200 uranium, the stock's going to the moon. I don't know that that's going to happen. That's the bad news. The good news is that with the increasing demand that we were talking about earlier, how much this is just rising, and it's only getting more going forward. The odds seem to me to favor rising uranium prices, that if they don't plateau, they sort of find a new normal at a higher level that pays miners to deliver product to the market. Mm-hmm. That would actually be a great thing for the mining industry. It may not be great for the speculator who's counting on the moonshot. Sure. But let's say uranium rises to the $70, $80 level, and then on an inflation-adjusted basis stays there at around $80 or something like that for years and years to come. That would be great. I mean, imagine what a wonderful thing in the mining space it would be if you could actually count on prices and plan your mine life, realistically, that the prices will still be there. That's a rare luxury in the entire mineral space. So this bad Darth thesis that I have about just a more modest increase and then supply meeting demand and making things normalize at a sustainable but workable price is actually very good news for the business. What that does mean, though, is that you can't count on the story of making all the stocks flying forever. In a situation, in a scenario like this, the better companies, the real McCoys, the ones that have mines that work, those are going to be the ones that win and deliver for shareholders.
Okay, I like it. Lobo, thank you so much for coming back on the show. I appreciate your time.
Happy to pitch in, Jay.
And check out Independent Speculator for everything else that Lobo's up to. So once again, appreciate it, man.
Thank you.
All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video, or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right, thanks again.